Singapore's economic history started in 1961 when they gained independence from the United Kingdom and then joined Malaysia. In 1965, they gained independence from Malaysia. Before this, in early Singapore, 70% of Singapore's households lived in badly overcrowded conditions, and a third of its people squatted in slums on the city fringes. Unemployment averaged 14%, and half of the population was illiterate. With a GNP per capita of less than $320 American, Singapore was a third world nation with poor infrastructure and limited capital. Low-end commerce was the mainstay of the economy, and the handful of industries that existed produced only for domestic consumption, leaving no room for direct foreign investment. The Singapore government then established the Economic Development Board in 1961 to spearhead an investment drive and make Singapore an attractive destination for foreign investment. By the 1970s, industrial development was surging ahead as the Economic Development Board marketed Singapore to be a quick operations startup location where factories were built in advance of demand and a highly skilled workforce was readily available. Multinational corporations began research and development activities in Singapore as an extension of their already successful manufacturing operations, demonstrating their long-term confidence. In the 1980s, the first silicon wafer manufacturing plant was built in Singapore, and the Economic Development Board then set up a small enterprise bureau in 1986 to shape a range of assistance schemes that helped facilitate the growth of these companies.
Singapore's economy relies on capital and skilled labor to thrive. The manufacturing industry makes up the largest portion of the GDP at nearly 19%. As you can see in the chart to the right, electronics manufacturing makes up a substantial portion of Singapore's manufacturing output. Singapore uses advanced manufacturing technology to maintain its place as a leader in the production of many computer components, including semiconductors, silicon wafers, hard drives, and much more. Chemical production is another major industry in their manufacturing sector. Singapore's Jurong Island is the heart of their chemical production industry. The 12 square mile island just off the main island of Singapore serves as a world hub for petroleum refinement, chemical manufacturing, and chemical research and development. The manufacturing industry in Singapore has increased a total of 27.5% throughout 2013. Additionally, the construction industry in Singapore increased by 11.2% throughout 2013. Singapore's economy also gains from its service industries. These include industries like wholesale and retail trade, transportation, finance, insurance, and more. This sector of Singapore's economy increased by 11.5% by the end of 2013.
Because of Singapore's size, it does not have many natural resources besides fish because of its location to the Indian Ocean. Yet water itself is a scarce resource and has to be used wisely. Singapore has come up with an efficient water management policy to ensure sustainability of water resources over a period of time. The government in Singapore has taken initiative by investing in infrastructure, upgrading technology, and devising water management strategies to manage the water resource. Singapore is dependent on oil and natural gas imports. They also took a conscious decision to move from fuel oil to natural gas in 2001, and now natural gas accounts for 80% of the electricity generation in Singapore.
Unemployment in Singapore has remained very low for the previous years. As you can see in the graph, there was a spike in unemployment around the 2008 recession. That spike subsided by 2010. Unemployment is expected to continue to decrease as Singapore continues to expand its industries. Inflation in Singapore has recently decreased after some large spikes over the past few years. Since Singapore is dependent on trade and FDI, they are very vulnerable to price changes around the world in products they both import and export. The Monetary Authority of Singapore expects inflation to increase to between 2 and 3% throughout 2014 based on global economic conditions. The Consumer Price Index in Singapore continues to slowly increase. It reached an all-time high of 117.28 in November of 2013 and dipped slightly to 116.9 by December of 2013. Singapore's GDP continues to grow with its economy. As you can see in the graph, GDP in the country has been steadily increasing over the past 10 years. Singapore's manufacturing, construction, and multiple other service industries continue to expand and feed the nation's wealth. Singapore's small population and abundance of capital makes their GDP per capita very high. Singapore's GDP per capita is currently 3,988, which is 274% of the world's average. Singapore is an extremely wealthy country. The people there enjoy a similar standard of living as those in the West. The cost of living can be considered high, although citizens benefit from low tax rates and many well-paying job opportunities in numerous different industries.
Since 1981, the Singapore dollar exchange rate has been appreciating against main global currencies. Between March 1981 and September 2000, the Singapore dollar appreciated about 20% against the US dollar. It has also largely appreciated against other Asian currencies. There are four major features of Singapore's exchange rate system. The first is that the Singapore dollar is managed against currencies of trading partners and competitors. The various currencies are weighted in importance and then factored into Singapore's current trade patterns. Secondly, the MAS, or Monetary Authority of Singapore, operates a float regime for the Singapore dollar. The exchange rate is allowed to fluctuate within a set band instead of a fixed value. If the rate moves outside the band, the MAS will take action, usually buying or selling foreign exchange. Thirdly, exchange rate policies are periodically reviewed for consistency so that the MAS has enough flexibility to accommodate short-term fluctuations in the financial markets. Lastly, the MAS must give up control over domestic interest rates and the money supply. Interest rates are determined by foreign interest rates and investors' expectations of future movements of the Singapore dollar. Here, according to this graph, we can see that as of February 24th, 2014, one US dollar was equal to 0.79 Singapore dollars. Singapore's market economy is highly dependent on trade. It is a major source of international FDI in terms of outflow, and also attracts an inflow of FDI from foreign investors due to its lucrative investment climate and stable political environment. The economy relies heavily on exports of electronics, chemicals, and professional services, which allow it to purchase natural resources and raw materials that it lacks because of its little land area. Its manufacturing industry plays a large part in its economy, but is also an important middleman in purchasing goods and then re-exporting them. In 2011, exports totaled around $414.8 billion, which is almost 20 times their gross external debt. The economic sectors that Singapore's economy affects the most are the secondary and tertiary sector. It has little to no effect on the primary sector because it lacks many fundamental natural resources as previously mentioned. About 20% of Singapore's workforce is employed in the secondary sector. The most important is the tertiary sector, or the service sector, which provides jobs for 80% of Singapore's 3.03 million workers and employees. This sector creates 70% of the country's GDP and is the reason why Singapore has arguably the busiest and most impressive cargo port in the world.